Hey everyone, welcome to So Much Better, where we turn business challenges into opportunities for growth. If you're a small or medium-sized business owner, today's video is a must-watch. We are diving into the basics of financial statements, what they are, why they matter, and how mastering them can actually increase your profits. Grab a coffee, hit the subscribe button, and let's get started. Here's what we have to say about the basics. Financial statements are the scoreboard of your business. They show you in black and white how your business is performing. They're like the scoreboard. There are three main types you need to know about. The income statement, which is also called the profit and loss or the P&L, the balance sheet, and the cash flow statement. Think of these as the GPS of your business journey. Without them, you're driving blind. So just a moment here, I'm going to share my screen and show you, start with the income statement. Just one moment here. See if I can find it. Here's an example of an income statement. It shows you the different components of what you have. For example, your gross profits, your operating expenses, and your taxes. And at the bottom, it shows your net income. This is just a generic example. So what I want to show you right now is for the income statement. First up in the income statement, document shows you the revenues, the expenses, and most importantly, the profits and the losses of yours for a specific period. Then the revenues is all the money that your business brings in. The expenses is all the costs of running your business, like the rent, the salaries, and the supplies. The net profit or the losses are the revenues minus the expenses. And that is what you really care about, okay? Because that's your bottom line. And why this matters is because knowing exactly where your money comes from and where it goes helps you spot the opportunities to cut costs and boost your sales. For example, if you see expenses creeping up, you can take action before it eats up your profits. Quick tip: review your income statement monthly. Look at the trends. Are the sales increasing or are they decreasing? Are certain expenses growing faster than revenues? You might want to look at that. This is your first step in making smarter decisions. Next, we'll look at the balance sheet. I'll try to share my screen once again. Just one moment, please. Oops, that's the wrong one. Here's an example of a balance sheet. The balance sheet shows the current assets, the fixed assets, and the net fixed assets and the total assets. And that's on the left side of the balance sheet. And on the right side of the balance sheet, it shows the current liabilities, which are the liabilities or the loans that you have to pay. And it shows the long-term liabilities, like the bank loans that you might have. And then the net equity is what you have that is your equity that you have built up in your business. And if it's negative, that means you owe more money than what you have assets. Okay? So the balance sheet is a snapshot of your business health at a specific point in time. There are three components that I just covered: the assets, what you own; the liabilities, what you owe, your loans, your account payables; and your equity, which is the value left to you, the owner, after your debts are paid. Why this is important? It's because your balance sheet shows you whether your business is financially stable. If your liabilities are higher than your assets, it's a red flag. If your assets are growing, you're building a strong foundation. Quick tip: check your balance sheet quarterly. Make sure you're not taking out too much debt, and watch your cash reserves. These are your safety nets. Now, let's talk about the cash flow statement. A lot of people don't understand what a cash flow statement is. So just one moment here. I'll share my screen once again. Here's an example of a cash flow statement. It shows the cash from the operating activities, the net cash from the operating operations, the cash from investing activities, the cash from the financial activities, the cash from net increases in cash, and the closing cash balance. And this is usually for 1 month, okay? Or it can be for the end of the year. It's for a period of time, okay? And it shows you what has been increasing, or it could be decreasing. What's in brackets here means it's been decreasing. That's a loan repayment. So the cash flow statement, now let's talk, okay? This is all about the money moving in and out of your business. There are three sections: the operating activities, the cash that comes from your core business operation; the investing activities, the cash from your buying or selling of assets; the financing activity, the cash from loans or investments. And why does this matter? It's because you can be profitable on paper, but still be running out of cash. That's why the cash flow is king. If you don't have enough cash to pay your bills, your business could be in trouble if you're not, even if you're making profits. So quick tip: monitor your cash flow weekly. If you spot cash crunching coming up, you can act early, like speeding up collections or delaying expenses. So to wrap things up, So now you have an understanding of financial statements and how to actually increase your profits. Spotting the problems early. You'll see the issues before they become disasters like rising costs and declining sales. Making informed decisions. Should you hire more staff, buy new equipment, expand your product line? Your financials will guide you. Setting realistic goals. You can set an achievable sales and profit targets based on real data, not just guessing. Attracting investors or loans. Banks and investors want to see strong financials. Clean, accurate statements make you look professional and trustworthy. Paying yourself more. When you know your numbers, you can confidently take home more without risking your business. Are you ready to take control? Here's what you can do today. Start reviewing your financial statements regularly. Use accounting softwares. There's QuickBooks and there's others as well. Talk to your accountant if you have one. Don't be afraid to ask questions. Set up a monthly review to review your finances and have a meeting, even if it's only with yourself and your cup of coffee if you have one. And remember, you don't need to be a financial expert. You just need to understand the basics to put yourself ahead of most business owners. If you found this video helpful, give it a thumbs up, subscribe, and share it with other business owners. Drop your questions in the comments. I love to hear from you. And remember, when you know your numbers, you control your business future. Thanks for watching. I'll see you in the next video. Thank you.